We are with José Pereira from Caerus. So, José, tell us more about Caerus and the types of startups that you invest in.
Well, we are a new fund that was launched in September of last year. We are anchored by the Near Foundation, and our mission is to create more of what matters most, and that's culture. We invest in early stage startups that enable the digitization of culture and entertainment, i.e., sports, music, gaming, arts, fashion. And our thesis is that the next wave of investment is going to go on the application layer. So we think that the next big app is going to be where creators migrate. Right now, we see that Web2 technology companies have very big take rates on the value that is distributed to the creators. For example, in Spotify, you have a 90% of the royalties go to the company and 10% go to the creator. So part of our thesis is that blockchain is going to redistribute how that value, it's going to unlock different ways to distribute the value that is created to something that is more fair and equitable for these creators, talent, IP owners, and brands.
Very interesting. So, what do you think are the biggest opportunities and challenges facing the blockchain and cryptocurrency industry right now?
So there's a lot of risk. We are still figuring out a lot of things like regulation, hacks, again, business models that can be flawed, but that's just part of where we are as a nascent industry. So I think that there's going to be applications, there's going to be opportunities in applications, companies that are solving all of these issues. We are looking at, for example, if we look at sports, there is a decrease in the attention span of the users of the next generation. So kids of 12, 16 years old, they're not watching, for example, a 90-minute football game. They are watching the summaries, they're playing different things. Entertainment is changing. So we're looking for technologies that target that next generation of users, that gamify interactions. Again, there's the take rates, fair distribution of value, loyalty, adding liquidity to loyalty programs is something that there's many companies that are trying to achieve that. And we are placing bets in different ones that have some sort of advantage that can be in the side of partnerships, business development, contacts, access to different type of brands, talent, IP. Those are the things that we're looking at in terms of opportunities.
In this context, what advice would you give to entrepreneurs who are looking to raise funds in the blockchain and cryptocurrency space?
So right now, diligence has improved a lot, which is a good thing for the industry. But I think then founders need to have a more strategic roadmap when it comes to raising money, be very clear on how are they going to make money, how are they going to survive this bear market where, let's say, trading volumes are going to be low. So you cannot have expectations of revenue that are based on old data. I think it's very important when they go to venture capital funds to know exactly what are they going to do with the money and how, let's say they're going to raise their next round, how are they going to deliver value and upside to the investors that are putting the money and taking all of this risk. So I think that's one advice on the fundraising side, preparing for the bear market to last longer than expectation. We see a lot of companies that are quietly shutting down. So the bear market is going to wipe out some companies that didn't do appropriate planning, that don't have the business model to sustain. So those are the advices to start.
So the last question for you is, what are some of the biggest misconceptions people have about investing in blockchain and cryptocurrency, and how do you address them?
It's easy to brand everything. There's a lot of things that have gone wrong with the industry on the last year. So the reputation of crypto as an asset class was hit by the Luna, by the UST, by FTX, and all these malpractices. So I just think that the misconception is it's a nascent industry, it's something new, it's imperfect, all of these things are sorting themselves out. And part of the opportunity is being early into this. So if you like high risk but outsized opportunity, I think that investing into Web3 is at a sweet spot. where you have a confluence of adoption, right? We're not at the same level that we were 2014, 2018. There's technological innovation, regulatory frameworks have developed, and I think that there's also more accessible valuations. So valuations were overheated in 2021, 2022, but I think that now they have come down to more reasonable levels, maybe a better medium between founders and institutional investors. So yeah, I think that the negatives can give a bad branding, but there's just ton of opportunity for the people that go in depth, do their diligence, and select investments strategically.
Jose, thank you so much for your interview at CryptoKTV.
Thank you so much. I appreciate it.